Welcome back, dear crypto fans. Sive Morten is here with the forexpeacearmy.com. Let's take a look again on the Bitcoin market and see what's going on, and actually what we could expect in the nearest few sessions. So on longer term charts, on the weekly, on the monthly, I do not see yet anything special. So you could see that market is gradually moving higher. In general, it keeps the bullish context with all this stuff, but here we do not have anything new. So we have the same target that we already talked about many times, approximately 127, which is a major XOP extension with an all-time ABCD patch. So currently only the question whether the market will break existed resistance levels on the lower time frames and keep going higher, or we could get some more extended downside performance. And as you understand, this is not a simple question, especially when we're coming to the Fed meeting. In general, rate cut is always supportive for Bitcoin market. But here is more important what the Jerome Powell will tell. Supposedly, as market expect approximately 70 basis point cut until the end of the year, and Fed has to prepare the market society for some cycle of the rate cut, right? So he should change the rhetoric on a more dovish. In this case, the effect might be something between 25 and a 50 basis point cut. So stronger than just the 25, but maybe not as strong as 50 basis points. And that also should be supportive for the Bitcoin market. From that standpoint of view, so on the weekly chart, well, here I also do not see anything special. From that standpoint of view, if you take a look at the daily chart and on the 4 time frame chart, it might be two possible scenarios that I consider. Mostly it depends on what Jerome Powell will tell. For now, market perfectly has completed the target that we specified on Thursday. It's a ABCD pattern here with this 116.20 area approximately. It's clear A and really accurate ABCD pattern. You could see that the CD leg slightly lower than the AB, which means that here we could get the pullback. That is absolutely normal, just because market will prepare for Jerome Powell's speech, and it might be some silence on the market before the storm will come. Besides, even from the technical point of view, we have agreement resistance. Market has completed ABCD target right around fib levels. Now it stands in between of them, but in general you have the 50% and 618 resistance here, which is great, some resistance cluster where the ABCD has been completed. Finally, we have Gartley's triple to sell, which suggests at least the 30% retracement. So this is typical target for this pattern. That's what we have on daily chart. Trend here is bullish, as you could see. So, but on the lower time frame, there is another scenario that I would like to share with you. I'm not sure that this definitely will happen, but we also can't exclude it. And I just would like to share with you, just to not let you be frustrated if you will see it. So it might be lead you to some wrong conclusion on the market. Take a look. Here is our blue initial minor hand shortest pattern, right? Market now completes first target right here. The next target stands around 120. This is 1618 expansion. Next target of the hand and shoulders. Before it will go there, we said this might be some pullback here. It's absolutely normal performance as it usually happens. Market shows some reaction on the target, maybe in some way of the ABCD retracement or forming some reversal pattern, short-term reversal pattern here anyway. But also I see the chance that it might be deeper retracement, approximately to the 111 support, 618 support, in the case if market will start forming big head and shoulders pattern. So take a look, we also can't exclude it. This might be shoulder, head, and another shoulder to be formed. Obviously, this drop might follow mostly by some external factor, because drop really will be big. It's more than the approximately 6-7 thousandths to the downside. It's hardly will be just triggered by pure technical reasons, technical picture. It probably will be some news event stands behind it or something. Maybe Jerome Powell will tell something wrong. We do not know, but we can't exclude it. So if you will see that collapse starting or some strong downside action stance, don't hurry up with the conclusion that this is bearish reversal, market ready to collapse and everything will just keep drawing to the 107 and below. We can't exclude it as well, but only if market will break 111 level. Until it stands above 111, it keeps short-term bullish context valid. We would like to see small retracement, of course, but if still we will get this one, it doesn't mean yet that this is that strategy. So situation then could change significantly. That's just to let you know. Currently, what we could do in the current few sessions until the Fed starts. So if you take a look at the hourly chart, we have the same channel when the market stands accurately, and a few support levels. First one stands 114.22 approximately, agrees with the lower border. This is, by the way, no, this one will be the target of the 222 on daily. Right, so the next one is a conference support, 112.60, 113.17 area approximately. So these two levels, we would like to see that market hold above them. If we suggest first scenario with the upper continuation to the next 120 target. So market has to stay above them. If you will see that market is breaking down, watch for these levels. In this case, it might be the chance for a bigger head and shoulders pattern. So for trading purposes, what you could do, the most conservative approach is, of course, do nothing, wait for the Fed and watch for the dip level if you're super conservative. If you in general would like to buy and you're ready to deal with the patterns that we have just discussed, you could split your position in parts and accumulate it gradually. For instance, if market would drop here, buy some part of your position, 25%, 30%. If it drop more here to the confluence, add another 20%, 25%. Finally, if you'll see that it's collapsed here, add more. And on average, you will get some more or less acceptable position around maybe 112, 112.30. This will be your average entry. So that's the most safe approach. Of course, you could try to catch the particular reversal points. This will be great if you will be able to do this. But the majority of traders have not enough or maybe so super skills that to catch the precise reversal points, especially in Bitcoin market. And accumulation, it's a great some compromise with the position taken. If you're sure about the direction, you would like in general to take the part with it. Splitting one position and trading it in parts, well, it's always a good decision. So concerning bearish positions, currently we do not consider them just because we have the bullish context on a higher time frame, on a daily chart. But it's not forbidden if you trade on a really lower time frames, on hourly chart, 15-minute chart. Of course, you could try to find here some bearish patterns and try to trade it down to some of the predefined support levels. But this is too small scale, that's why we do not consider it in our video. We're mostly focused on the daily time frame. So that's probably all for now. Let's see what will happen and return back to the subject on Thursday.